Yo, what's going on?
Hi, everyone. um, sorry, I'm laughing because these markets are funny. Um, yeah. So I'm going to cover what happened today in the news, what's going on today. I want to go over all of that stuff. Deviate. We're going to talk about stocks a little bit. We're going to talk about crypto a little bit. So I'm just going to cover a little bit of everything. All right. So Monday. Oh, sorry. Let me share my screen. Oh, I can't share my screen. So I'm just going to talk in the meantime. So Monday we had ISM manufacturing news come out, and it was not great. These indexes that you see, the indices, if you want to say the plural for index, but they're not like an actual trading index. When you're looking at these numbers, typically the positive thing would be for them to be over 50. This is over 50, so it signals growth, but it wasn't as much growth as they were expecting. So the key point behind these numbers are just to monitor them and compare them, because you're always looking for growth month over month in these sectors. Yesterday, we had news from the Australian dollar about their cash rate. I wasn't really expecting them to change it at all, not really expecting a whole lot of economies to change their rates anytime soon. But that's something we will talk about once I'm done with the calendar. New Zealand had their equivalent to unemployment change on yesterday, and their news was actually really good. So their employment change was good. They created jobs in the market, and their unemployment rate fell. So that can actually let you know that people left the unemployment market, whether that was being on unemployment benefits, being part-time, having no job, like all of those things can qualify as unemployed. And then switching to either having benefits, being full-time, or actually being employed, getting a job. So that was a positive news element for New Zealand yesterday. And then today. So US news, yeah, we started out the morning kind of rough. Our preliminary non-farm number this morning was horrible. And when I say horrible, I mean like it sucked. Like it was really bad. We haven't had numbers this bad since the end of 2020, by the way, if you want to know. Actually, just let me show you. Oh my gosh, it's so funny. Look. This purple bar was the number that we got today. We haven't had a drop off like that since the end of 2020. Yeah. So hopefully this isn't going to be a cycle of employment, because if I would have to pull up the actual report from sometime in, like, let's say the beginning of this year to end of last year to pull up the first half. But the first half of the year for 2020, it was very dramatic, but it was a drop off similar. So these employment waves, they're just that, they're waves. It's literally like a cycle right now for employment. Keeping to remember about this is that they are preliminary numbers. They're numbers that come from ADP. They have their own way of calculating these numbers, but they were not great at all. If you just want to go up, we can actually see where these jobs were created per ADP. Most of these jobs were created in mid-sized businesses that have anywhere between 50 and 499 employees. And then the sector that created the most jobs, according to ADP, was the service sector, which makes a lot of sense. And then also today we had service numbers come out, and our service numbers were great. So it doesn't surprise me at all that this sector created the most jobs, because when you actually look at what is considered in that sector, you have information services, financial activities, professional and business services, education and health, leisure and hospitality. And leisure and hospitality actually created the most jobs. They created more jobs than literally all, like, if you look at 139,000 compared to the actual business classes and company sizes, they created more jobs than any of those single business sizes, if you look at them individually. So leisure and hospitality, so like companies like your airlines, your airports, your travel agencies, those companies are actively, or had been and are still actively hiring for people. um Transition just a tiny bit to some news. um if you're traveling, know somebody that's traveling, or if you're just paying attention to the news, you've heard airlines are having to cancel flights. This is like the worst time of the year to fly, and it's not even just in this year. It's just any time of the year. I mean, any other year. It doesn't have to be just this one. This time of the year, this part of like July, August, is when you get a lot of thunderstorms. Climate change has a lot to do with it, whether you believe in climate change or not. Climate change is to blame for why the weather is the way that it is. So there are like these huge storms now that are forming in the middle of the US. And so you can't do East Coast to West Coast and vice versa travel, because literally the FAA has a weather department. They will shut down all air traffic around a thunderstorm. If the winds are too high, if hail is noticed, if microbursts are noticed, they will literally shut down airspace. They don't care about you needing to get to work, needing to go see your family. It's a matter of, if we put that plane in the sky and that plane flies through that area, you're going to fall out of the sky and you're not even going to make it to where you got to go. You won't even live to see the next day. Like, so they shut down airspace altogether. So this leisure and hospitality area is really important right now. I'm gonna finish the Forex factory calendar. We'll come back to it because there's a lot more to unpack with that whole sector right now. I showed you services. Services news was above 50, and it was also above forecast. So that's great. Tomorrow we have a lot of GBP news coming out. We have rates, asset purchases. Just as we continue to hear more and more about how the UK is separating itself from the European Union, becoming more independent, building their own streams and lines of communications with other countries. All of these things are going to be important. I had somebody ask me, and it was a funny question, but it was a serious question all at the same time. So when we talk about assets, like just that word asset, period, when it comes to the GBP, no, that does not include the royal family. That is like, aside from their assets, aside from the things that they purchase, is strictly the government. So good question for the person who asked me, but no, that does not include royals. The royals actually hide a lot of their assets and a lot of their money offshore. That came out in a WikiLeaks a couple years ago. It was like official bank statements and documents about how the Queen, has personal assets in the Caribbean and in other areas where they have Commonwealth and also have low taxes. So they hide a lot of their stuff offshore. Anyway, whatever. But no, that does not include royals. Also, tomorrow we have unemployment claims. Unemployment claims is going to be, in my opinion, fairly close to forecast, but we could possibly get a pop above forecast for unemployment claims. My reasoning for thinking about it, unemployment claims like that, is because when you start to look at what we're hearing about in the news, companies are going to be less likely to bring people in, to want to hire people, to want to take people off certain benefits or bring them back in full time to the office, whatever the case may be. They're going to be reluctant to do that now because now you have a lot of states going back to some type of restriction. You have vaccination requirements. You have people who don't want to deal with the vaccination requirements. So I think I brought it up already. Here in North Carolina, all the healthcare systems banded together and made it so that you have to be vaccinated or you have to do an exemption, which they're making it really hard for you to do the exemption. But you have to do all of that in order to be able to work, or you have to quit or move to another state. Like those are your options. And so a lot of people aren't wanting to deal with that. So they're, just kind of taking the route of seeing, okay, what's going to happen, but then also saying that they're just going to rely on the benefits to get them through, to help bridge to whatever other area they're going to go to, because employers are giving letters. So there is a way for people to get benefits who don't want to have to go through the vaccination process. We'll talk more about the vaccination process when I finish the calendar. RBA governor speaks tomorrow night, and then Friday we get our NFP. So we share NFPs with Canada every once in a while. I don't really care about Canada's NFP this time. It's probably going to be relatively on par with what's forecasted. But I want you guys to look at and pay attention to what the US unemployment change and unemployment rate are right now. We just had ADP numbers come out today. Check it tomorrow. Like, look at it tomorrow, see what it is, because I'm pretty sure tomorrow they're going to change this. And then late tomorrow night, they're probably going to amend it again, because considering how off the numbers were today, like the forecast for ADP was 695,000. And the forecast for the government is like 870,000. Well, we didn't even meet the 695,000. So this number will probably get amended sometime tomorrow. So it's reported, you guys will be able to see what it was. And then you'll be able to actually see what they changed the forecast to on Friday. And then what the actual number will be at 8:30 on Friday morning. So I don't think that these numbers that we get right now from the United States are just going to be dramatically bad or as drastic as ADP, but I don't think we're going to hit target. One thing that I do want to look at and pay attention to are the numbers for next month, because this is the month where we have a lot of states going into more restrictive policies, more restrictive rules for schools, for healthcare and state employees, for restaurants, for businesses. So this is the month where we're going to see if services can maintain that positive number that they have. We'll also probably see manufacturing switch to positive eventually, either next month or the month after, because as you have people continuing to wear masks, yeah, a lot of people are wearing cloth masks, but hospitals are starting to do what they did in 2020. They're starting to not do elective cases. The beds are full. They're having to divert people. Like, let's say you live in Mecklenburg County, if you know about North Carolina, let's say you live in Mecklenburg County and you call 911 and you need help. And they're like, well, Atrium and Novant are all full. So we're going to have to divert you. Are you okay going to Cabarrus County? Or are you okay going to Wake County? Like, you're thinking, why would I have to go that far? But that's how it is in some states. Some EMS services are having to drive people 30, 45 minutes, sometimes even an hour to even get to a hospital that has an available bed. So those supply chains for hospital supplies are going to start, ticking up again. You hear about Delta variant, you hear about how it's more contagious, you hear about the gamma variant and now the lambda variant, and how the lambda variant is way more worse than all the other ones. So people are going to start panicking again. People are going to become clean freaks again, because, you know, people have started to kind of like ease up, you know, and not be as cautious with their, you know, hand washing and hand sanitizing and stuff. So they're going to go back to that all over again. So yeah, I'm paying attention to all of that. That's going to tie into, you know, all these people going back to work. It's going to tie into kids going to school. It's going to tie into how businesses and restaurants are actually able to stay open if people have to show proof of vaccination to go in, like in New York. If you have to show proof of vaccination to go into a restaurant or any public space, how willing are people going to be to want to do that? And then if you're not vaccinated, you just can't go, period. So with that, hint, hint, you know, your delivery services are going to see a boom in New York, at least because of that, because a lot of people either didn't vaccinate, won't vaccinate, or don't feel like they have to show proof of vaccination because it's against their civil rights and liberties. So that's that. So switching over to like all my after calendar stuff. So I talked a little bit. Oh, I said I was going to talk about stocks. I kind of gave you guys a hint about delivery services just then. Clorox had their earnings yesterday and they were horrible. They were horrible because Clorox betted a lot more on people using their cleaning products than what was originally expected. However, I am actually looking at Clorox now because of the resurgence of Delta, and then you have Gamma and Lambda variants of coronavirus. Because of what I just said, people are going to become clean freaks all over again. You're going to have hospitals that will, or could possibly, I'll say could possibly, have shortages of materials and supplies that are needed because the supply chains that Trump put into place, those supply chains aren't really there as strongly as they were. So you could have hospital systems, private systems relying on Clorox items, the sprays, the Lysols and stuff, or the, I shouldn't have said Lysol, but just like the Clorox brand sprays. And just relying on those things to help clean. So Clorox, if you're interested in a company to look at and research, Clorox is one. You can go to their website and go to their investor relations page and look at their earnings report that came out yesterday. It's 57 pages, but it's very interesting because people think Clorox is just Clorox. Clorox owns a health and beauty brand. They own Kingsford. They own Hidden Valley Ranch. They own Pine Sol. They own Kitty Litter. They own a lot of things. So keep that in mind. They're almost like a Pepsi or Coca-Cola, but for health and like cleaning products. All right, so continuing on, I'm gonna go back to the top of the calendar and just kind of come back down and jog my memory about some things that I was thinking about that I never actually said out loud. All right, so tomorrow, I'm gonna talk a little bit about crypto because I want you guys to understand, like, when these markets move, like when you see bullish engulfing candles or just huge candles that have a lot of volume in them, know that those candles are billions of dollars. There are billions of dollars in those candlesticks. So, you know, I've been looking at crypto transactions. I've been looking at regulation about crypto. So the SEC has actually kind of switched gears, and they're really interested now in creating a Bitcoin ETF for those people who are into crypto, but you don't want to outright buy crypto. but you kind of want to buy stocks, but you don't know where to go. Well, the SEC is getting ready to help you out. So they're getting ready to create a Bitcoin ETF, and it's an exchange trade fund. So it will literally be a it will be a grouping for Bitcoin. You would get a dividend yield, it would have returns. You would pay a same fee almost as you would with like a mutual fund or something like that, but on a smaller scale. And you would be able to buy into it the same way you would with like a stock. You would be able to buy it and hold it long term. So while that's a great thing, there are a lot of people out there who don't like it. And it's the Bitcoin people, which is kind of confusing. Bitcoin proponents wanted the SEC to kind of do their thing with regulation for Bitcoin and kind of help it along to make it more quote unquote mainstream, but they're not really liking this idea. They feel like this idea will open up the possibility of these companies and regulators trying to get information about those who have Bitcoin and do crypto transactions. Cardano has, I was telling you guys earlier in the year about Cardano. They still have a lot of great things going on. They've teamed up with more companies now. So they're really working to better their Cardano brand and to just make crypto more accessible for everybody, not just those who know about crypto, but they're trying to just put it in everybody's face. They're trying to let you know that, what crypto is, what it's about, how you might actually be able to benefit from it. And then Ethereum. Ethereum's getting ready to go through a major change tomorrow. It's a change that the last time Bitcoin did it was maybe 3 to 5 years ago, but it's where you fork. So literally it's like having a new protocol. Actually, it is a new protocol that will be launched for Ethereum. Whenever some of you were asking about, oh, well, what's Ethereum 2.0 and what's this Ethereum and what's this and what's that? So it will be along the same lines, but it's actually going to be the main Ethereum kind of forking. The benefits to this happening is that it's going to make processing slightly faster, hopefully a lot faster. And then it's also going to make fees lower. So anytime you see a crypto going through a hard fork, as they call it, there's always supposed to be a benefit on the other side of that. So those are all things we're going to be paying attention to tomorrow for crypto, and then going on through the rest of the year. Bitcoin has kind of hit this lull, which is, in terms of Bitcoin, fine, because Bitcoin is always going to do what it wants to do. But just know that the money that was being transacted in Bitcoin before, like a lot of that money is just kind of sitting. It's not really going anywhere right now. A lot of the money that's moving in Bitcoin right now is retail and what they would call like your small managed funds. They're kind of doing a little bit with Bitcoin right now. All right, so I was going to send you guys a picture last night, but I changed my mind because I hadn't really finished it yet. But I feel like everybody should have a piece of paper that they can say this about. I have $1 billion sheet of paper. Like, I'm holding a sheet of paper in front of me right now, and to me, this sheet of paper is worth $1 billion. Everybody should have a sheet of paper like that. That sheet of paper should have like your wildest dreams, your goals, your dreams, your aspirations, like everything. But then like your skills. Everybody on this call has a skill. Everybody has something that you can do or talk about really, really well that you can monetize. That should be on your sheet of paper. Well, I told you guys at the beginning of the year, We were going to be doing stocks and options, and we were going to be talking about all those things this year. Well, that's what's on this sheet of paper. I have stock picks on this sheet of paper. I have resources and stuff I've learned, gained, stuff mentors have told me over the years. And I'm going to talk about maybe 3 of those things right now. And then I'll let Mr. Levels talk. All right. So first thing I'm going to say is this. So it's cool, like when you guys have assets, like remember, until you've sold your assets, they're unrealized assets. So it's just on paper. Remember that, because when you're looking at your accounts, when you're thinking about your take profits and your stop losses, like those things are on paper, and it just looks good in your MT4 until you've actually closed the trade, until you've sold the asset, until you've transferred the money to your account. Those are unrealized profits, meaning it's strictly on paper. It looks good, it looks amazing, but it's not real until you've sold it. If you're holding on to something, remember, on the other side of every investment that you ever make, there has to be a buyer, or else it means nothing. It's just unrealized profit. It looks good on paper. So remember that, especially for what I'm going to start teaching with stocks. Always remember that there has to be somebody on the other side of your trade that is going to want what you have. Otherwise, you're stuck with it because you can't get rid of it. Think of it as like having a house. You put your house on the market for $1.2 million. You feel like it's worth $1.2 million because of all the work you've done to it and because of your attachment to it. But other people might look at your house and not see 1.2 million. They might think, oh, that's worth 700,000. You might feel like that's an insult, but that's how the market feels. So no one's going to buy your house at that price. So that's why, look at listings. You see people relist at a lower price or take their house off the market for a while and then come back in at a lower price because they're trying to find that area and trying to reevaluate what their worth is compared to what other people are paying and what they might be willing to pay. When it comes to stocks, you don't really have that option of just choosing your price. I mean, you could transfer it to someone, but always remember that there has to be somebody on the other side of your trade to buy, if you're in an options trade, to buy or sell whatever asset it is that you're holding. So another thing, because we're going into a market cycle right now, and this is going to be super important. And this is what I wanted to talk about when I was going over the news for tomorrow. So we're going into a market cycle right now where people are wanting to get into the market still. Everybody sees the market running up. Everybody sees the market climbing every day. And they're like, I want to get in. I still have money. I've made some money. I want to jump back in. Don't be one of those people to jump into the market haphazardly, because I'm promising you that in the next couple of months, you'll get your head knocked off doing that. It's not smart. The markets are super overvalued. I'll teach you guys how to, figure out if a company or the markets are overvalued, but just know they're overvalued for where we are, for us to have resurgence of COVID and variants and, everything else that's going on. The markets are still running up as if nothing is going on, as if we're still pre-COVID. That's a problem. So I've been looking at institutions and how institutions trade. I was given some resources and I actually just went back and I just wanted to see like what kind of manipulation has happened in the stock market in the last year and a half. And these are going to be like tips and tricks and stuff for you guys to know and use in your picking of stocks and how to not get caught up. So if you hear a company talk about filing for bankruptcy, or if you hear a company say that they're having financial trouble or issues, or if you hear about a company that is having issues with sales or services or manufacturing because of the pandemic. So like an airline company, a hotel company, movie theaters like AMC. You hear companies like that talk about having issues, having to cut back staff, having to cut back hours. And then all of a sudden you see their stock pop like 10, 20%. There's a problem there. It's a huge problem there. Don't do it. Don't even attempt to buy in and get caught up in that madness. Because it's all planned. And I'll give you an example. So we all heard about AMC, the theater. They were actually getting ready to file for bankruptcy. They were getting ready to file for bankruptcy, and all the huge funds were anticipating that the price was going to drop below $1. So you had huge funds that actually had orders that they submitted into the SEC, because they have to when they do large orders. They had all these large orders that they had sent into the SEC, like, yeah, we're going to short this company. We're shorting this company. And you can go in as a consumer, as a retail trader, and see what stocks are being shorted. So had you looked and you seen, okay, they're shorting these stocks. What they said that was Reddit. I had to really look at the numbers and really, really see what was going on. The news said, oh, Reddit traders are buying this stock and pushing price up. When you look at order flow, though, the order flow for AMC actually showed that billions, and I mean hundreds of billions of dollars, was actually poured into AMC to jack the price up. Because think of, like, when I looked at it, I went back and I looked at news articles. It was all around the same time that Reddit was talking about how they should pump the price, because all of these hedge funds were shorting AMC and really trying to push them into bankruptcy. They were like, we should go in and pump the price up so we can hurt these hedge funds. So what did Reddit traders do? They went in, and you can actually see 100 shares here, 1,000 shares there, 3,000. Like, you see all these little micro orders, small orders. Then all of a sudden you see like 100,000, 500,000, a million. And these are on the buy side. So you had hedge funds that were actually buying against themselves. They took the loss on their short and pumped price. They literally pumped price way up. They did the same thing with GameStop. They pumped GameStop to over $300. And then they re-entered their shorts and took the other side all the way back down. And I don't even know where GameStop is now, but it's definitely not where it was before. So when they reported the losses of these hedge funds, they only reported what the hedge funds lost on their initial shorts. They never reported the profits. So Michael Burry, you guys have seen like The Big Short. He has Scion. It's the fund that he's over. He was in for like 20 million, something like that, around April of 2020. I think it was April. Anyway, this dude made $420 million off the whole GameStop debacle. He turned 15 million into $425 million. But these were orders that he already had in. So manipulation is going to be happening a lot right now in the marketplace. Robinhood went public in like the end of last week. Robinhood IPO'd at $38. It dropped to 33, and now it's like it's almost 70. It popped to $85 this morning. That's manipulation. There's not enough retail money. There's not enough small, sorry, I bit my tongue. There's not enough small retail money to pump Robinhood from where it closed yesterday at like the high 50s to low 60s up to $85 and then like drop just like that. There's not enough retail money for that. So these institutions are going in now and they're starting to pick people off in the marketplace. They're starting to pick people off in the marketplace because people are starting to get greedy. That's how you can kind of see and realize that there's a top kind of forming in the market, because institutions are really starting to go in and manipulate, and they're manipulating really, really heavily right now. They're manipulating new IPOs. They're manipulating solid companies that had great earnings that came out this week. And it's like, why? That should not have happened. So that's that. What else would I like to share? Okay, yeah, I'll share this and then this will be my last thing. All right, so you remember how I was telling you guys about market cycles? I was telling you guys about market cycles, how every market has a cycle, and you see signs in the market. There is a book, there is a guy who wrote this book in 1967, and it talks about market cycles and how in the stock market, if you start counting at 1902 going forward, every 8, 9, and then 10 years, you get market cycles. And market cycles being recessions and depressions and then market peaks. Well, for this cycle, if you look at it, it said that we were going to hit a recession or we were going to have a market downturn in 2021. It was a year off. It happened last year. So, and then every other year was like on point. So anyway, market cycles are real. People were writing about market cycles back in the mid 60s. And this guy actually predicted all the market cycles out through like 2150 or something like that. And we've been spot on. I mean, this time we're only a year off, but I mean, a year, when you think about it, bull markets last on average 6 to 8 years. Times of recession and market downturn tend to last about 12 to 18 months. So being off by a year is not that bad. So yeah, it's a lot going on in the markets. I just need for you guys to pay attention, ask all the questions you can possibly ask, because stuff's about to get real. It's about to get real. We talked about the housing moratorium. They extended that to October. So that's just prolonging the inevitable. Biden is pushing for a new infrastructure bill, $1.1 million. I know you guys won't understand the lingo and everything that's in it, but go read it, or try to read it. It's a long something. It's like 5,000 pages. I'm not encouraging you to like just have to sit and digest all of that, but I told you guys what I do with those. I have keywords that I look for or that I have in mind that I want to know, do you have something about that in this bill? Infrastructure bills. I want to know about roads, railroads, oil, Canada, Mexico, because they border us and we share infrastructure with them. We share major infrastructure with Canada. We share water infrastructure with Mexico. I would be looking for COVID. I would be looking for wallets, because we're still looking for, them to actually say what they're going to do with these wallets that they've talked about last year. Crypto, energy, electricity, nuclear power, and then gas pipelines. So Colonial, they might not mention Colonial by name, but something about gas pipelines, strengthening our Strengthening our infrastructure and strengthening the security of our infrastructure has to be in that bill somewhere. If it's not, then it's a trash bill. Just being honest with you. If it's not, it's a trash bill because we've had too many issues with our infrastructure being hacked and issues with supply. The only things that haven't been hit, nuclear and our electrical power grid. And we've already talked about how archaic our energy power grid is, which is why solar is super important. And if you don't know what solar stocks to buy, just buy a solar ETF, TAN. It's a great one. And I'm going to turn it over to Mr. Levels.
Cool beans, cool beans. Boy, you dropped it on us tonight. I knew you was coming. I knew you was coming with the heat. Yes, sir. As always, you know we appreciate you. All the knowledge and wisdom that you drop on us. Let's jump into these technicals, why don't we? Cool beans. Alrighty. Looking at the dollar as we always start with. Looking back at Monday, I told you guys that I expected to see the dollar push up to start the week out with. Um, as we can see, the dollar gave us little push downs here, retesting this level, but not breaking back below the previous low. So um, we can see that with the last retest of this structure here, that price, the dollar did give us that up move today. New York open gave us a good pop up. London market opened up. Good time and price action happening there. So with that being said, let's look at our currency pairs. Um, yeah, looking back at Monday, I told you guys, of course, if we expecting the dollar to start off the week bullish, we're expecting our currency pairs to start off the week bearish. We see that we had um, some upward movement, but nothing breaking above our previous high, either here nor here. We had here. And then today we had nice um, time and price setups. London markets open bearish, the New York markets open bearish as well. Um, and more than likely throughout the rest of the night going into tomorrow or whatnot, we'll probably see price come on down and finish filling in this imbalance that I was looking to get filled in. With that being said, let's look at GBP USD. Same thing going on here. I told you guys Monday that I wanted to see that downward move from GBP USD to come in over here and fill in the rest of this imbalance that we got here. We did get a pullback to previous level, nothing breaking above previous high, above this level. And so time and price set up today was nice. London's open up bearish, New York open up bearish as well. NZD USD did its own thing this week. Broke above structure, did not give us a good sell to the downside, and kept on going. It's all good. Can't win them all. No sweat. Silver did not give me that push down that I wanted to see. She did push back up to retest structure to the upside, and then we see off of this structure. I told you guys that if silver did not break to the downside as I wanted it to, then we would look for it to push up, respect structure, and come back up, retest this structure here, and fill in some of this imbalance, possibly all of this imbalance. Didn't fill it all the way in, didn't get up there, but we did make it back to retest this structure. And then we did make it back to retest this structure. And then we see today, market silver gave us a good sell off, and we'll probably see market come on down and give me the retest of this structure that I was looking for. So same thing with gold. Gold gave us a swing back up to retest structure and then gave us a sell off. So if you bought from these levels, I mean, if you sold from these levels, then you would have got stopped out right here above this high, which is cool. Is all good. Shouldn't have been in the market right here though. We always wait for our time and price set up. London markets, we know that. I always tell you guys that. So looking at oil, we see that oil broke below, came back and retested our structure, what we was looking for, and kept selling. And we know that oil does correlate with the dollar. So it pushed. We have some divergence going on with oil right now. Oil is pushing down, the dollar is pushing up. So that means that one of them is out of whack in the wrong direction, and one of them has to correct. More than likely, oil needed to come down and fill in this imbalance here. And now we'll see oil start to correct and push on back up to the upside to, catch up with the dollar. So with that being said, looking at Euro USD, I mean not Euro USD, US 30. I told you guys Monday night that I wanted to see U30 come back and retest its structure and give us some bearish momentum to the downside to come retest previous lows and fill in this imbalance possibly. And so we see that price did come back and retest structure. And today, time and price gave us a beautiful setup, and you should have knocked that out the park today. Time and price gave you kind of a fake out setup yesterday. London markets. We'll discuss that after the call. So at this time, I stop the recording and take any questions.